In this video, traders, we're going to look at 6 ways to lose money trading. Hey guys, warm welcome to you. All right, so 6 ways to almost guarantee that you'll lose money in trading. So if you don't get it, all we've got to do is do the opposite of these and we'll at least, not guarantee we'll make money, but we'll be on a better track. Okay, so the first thing is be greedy. Classic one this, guys. I think this is the case for investors, for swing traders, for actual anybody who is looking to make money in the markets. Now, there's nothing wrong with greed per se, right? We want to make as much money as possible. I don't think that's a problem, but it's how you manage that greed. And there's something, I can't remember who said this, but be long-term greedy. In other words, yes, you want to accumulate wealth and money over the long term, but you've got to play the game in the short term to get to that long-term greed in inverted commas. So if you be greedy, i.e. you're kind of looking for real big hits every time, you're looking to swing for the fences, you're looking to chop and change, do this, do that, it's never going to work. Now, there's a fine line, of course, between running profits and being greedy. Running profits is running them to a level that's achievable for that stock. If you say, I want the S&P 500 to go up by 50% this quarter and nothing less, it's not going to happen. If you say, well, the S&P 500 could have, a decent, good chunk, 4 or 5% rally this quarter, you could be right if you get on the end of a good run. So it's managing that and not being over greedy. It's the same with like short-term trades, guys. If you day traders out there, you know the score, you get into a trade and you say, well, I'm taking no less than 30 pips on this trade, but the thing's moving in kind of 10 pip cycles, then you're going to have to sit through multiple cycles to maybe get to that. If you're trading just for the first impulse, the first impulse isn't going to be 30 pips. So, watch out for that. So being greedy. Other one is over leverage. Big one, this, guys. It just kills everybody. Easy way to lose money is just to use maximum leverage. Now, I recognize with your new ESMA rules, that's dialed stuff down again specifically for European-based traders, but it works both ways. It works wherever you are. If you're using leverage, it can be your best friend, but it also can be your worst enemy. Most of the times, it's the latter, unfortunately. It's finding that sweet spot as is. If you start dialing up the leverage, you start going crazy, you start putting all your money in, you start moving the maximum margin, then the likelihood is you're going to lose money because the impact of 1 or 2 losses is devastating. Number 3, no stop loss. Let me just add a caveat to that because and I have done a video on this, trading without a stop loss. I do believe you can trade successfully without a stop loss per se. You can manage risk in other ways, but I still think if we say a stop loss is a level where you get out of the trade if you're wrong. So rather than a fixed position, a level you get out if you're wrong. So maybe we should have put / admitting you're wrong. If you don't admit you're wrong at some point, you end up being in a trade you don't want for ages and ages and ages. I know plenty of people who have gone into a trade expecting to grab a few points, a few pips, whatever it may be, still got that thing months later. Completely waste of time, guaranteed to lose money if you're trading without any exit strategy stop loss. Number 4, paying high spreads comms. This is unheard, this is untalked about, guys, but it's so crucial. Less so the less frequently you're trading, but really crucial for day trading. Paying high spreads or going with a bad broker, it would just kill you, especially if you're day trading. I've learned this the hard way, guys, when trading expensive stuff, 10, 12 years ago, specifically UK shares, getting hammered on the commissions. And, when you look back on it, you think, well, it was lucky you managed to eke out a small profit that you did when you think about the amount of charges you were paying. So, be mindful of that. And if you're paying high spreads and you're trading something that's got high commission or high spreads, then trade it longer term. Look for bigger moves. Don't try and day trade something that's got a small range and is a high spread or high commission to trade. All right, number 5, if you be impatient, you'll lose money. Guaranteed, if you're, it's not working, I'm going to close it and go into something else. I'm going to do this, I'm going to do that. I should save my pen then. You're going to do this, going to do that, I'm going to close this, and you just don't give trades chance to mature. All you'll do is rack up charges with your commissions, you'll rack up spread charges, your cost to trade because you'll be trading frequently. You'll never be be in a trade that goes your way because you're always grabbing the profit too early. You're always pulling stuff. Now, by all means, be impatient with losers, but being impatient with profit, you're not waiting for trades to mature and pay you for taking that risk, you're going to come out a loser. Final one, guys, number 6, trade emotionally. As with anything, guys, if you make a decision based on emotion, 9 times out of 10, when I'm talking about extreme emotion, by the way, so I'm not talking about going into a house and going, oh, I really like this house, I think I should buy it. You know, a lot of people do make buying decisions based on emotion, but I'm talking about extreme emotion. You're angry, you're frustrated, you're sad, you're happy, you're greedy, you think you can't do anything wrong, all these kind of emotions. If you're trading just because you feel like something's a good buy, just because you're frightened of missing out, you're scared of not being on it when it rallies, this, that, and the other, it's a surefire way to lose money. So trading a bit more clinically, a bit more logically, a bit of gut in there, can't harm, but trading from full emotion make you lose money. So those 6 things, guys. So if you hadn't guessed it, we want to flip them around. We want to be patient. We don't want to be greedy. We want to use small amount of leverage as possible. Make sure we've got our risk managed. Make sure we've got nice, good, low spreads and low commissions, or we're trading stuff with that. And of course, making sure we've got our emotions in check. Keep an eye on that emotional thermometer. If you're a subscriber, you watch the videos, you know what I'm talking about when I do that. It's almost like a standard thing now. So to the uninitiated who are just here, people see me do this. What's doing? Wiping the windscreen wipers? What is it? But you know, guys, emotional thermometer. We want to kind of try to keep it regulated. Not too hot, don't too cold. Anyway, loads of videos on that if that's the kind of thing you want to get into. But this one was all about 6 ways to lose money trading. Try and avoid these. Take care. Bye bye.